bunch of questions on oil and sort of what your thoughts are from here. What could happen? A couple folks have covered at the low end.
Yep.
Just trying to figure out kind of.
Yesterday we saw low end.
Yeah.
What's short? I mean, okay, good, important question. So when we have a nasty, so when we have a bearish trend, let's just do one of these. Because apparently people like these. So you got something that is, let's do a chart. So something like oil, which basically, let's just take the chart and put October here. That's when quad 4 started. That's when oil stopped going up because commodities in quad 4 stopped going up. The dollar starts going up. Okay, inflation expectations start to fall. So you start to get oil doing this. So all the way to where we are today. Let's just take this thing and do whatever. Isn't that a nice chart? And then just go wham, like that. That's what yesterday was. So you get an oversold signal right there. Oversold. So here you go back and you know, the series of lower highs, actually, it is quantitative. Actually, if I go back and look mathematically how the first guy that I worked with, he was my partner, would look at charts. He would literally take a piece of paper and he would go like this. He would take the thing and he would draw lower highs like this over top of it. You do like this. Maybe get a pencil here. You go like this. Okay. That's a bearish trend. Now, you know, again, if you're a slope guy, a rate of change guy or gal, that's actually mathematically true. So again, what you want to do is you want to just sell every time the thing, whatever this thing is, bounces to a lower high. So if it's going like this, you get all these opportunities to then it crashes. Okay, so that's why I circle things when you look at my charts on Twitter. I have these dots at the lower highs, like the 10-year yield. Guys, what does that chart look like relative to that? Doodles, right? What is that? A series of lower highs. What does that look like? CRB Index, flash that. Commodities expectations, inflation expectations, same chart. These things are, and that's why, and some people are like, Keith, I can't believe you had the disrespect to say something negative to Mr. Gunlack, the bond king. He is worth $1 billion and you're not. I don't know how you became worth that much money and I don't really give a damn. But if you can't get that right, you should not be the bond king.
Yep, very true.
The number one thing to get right in terms of bond yields is the rate of change of growth and inflation expectations. That's it. It's reported. It's on the tape. Commodity revenues, companies that generate revenues via commodity price inflation, those revenues are printed on the tape every single day. Are you doing your job every day? Are you contextualizing it within the same process that you had? Do you have discipline? Yeah, don't give me that garbage about respect. I mean, I'll respect people after the game, but during the game, I will slash you in the back of the legs and when the ref isn't looking like you wouldn't believe, and it's going to hurt.